Brent Cook of Exploration Insights is back talking to us about what's really going on in the mining sector and what opportunities investors have right now in the landscape. Brent, it's been so long. Welcome back to the show. It's a pleasure to see you.
Yeah, thank you, David. Good to see you. Sorry we're not in person.
Now, every single miner I've talked to this season, the last quarter, have given the good guidance on quarter three in terms of cash flows, in terms of margins. We've seen production halts and disruptions as a result of COVID. Do you think the recovery will really be as strong as some people are projecting?
It depends on the company and such. I would expect them to say nothing but positive news. But no, I think with these gold prices we're at right now, close to 1,900, I guess, they are going to be making a lot of money. Most of the major companies have been pretty conservative in upping their reserves and the gold price they use for reserves. So we should see pretty damn good cash flow coming into the majority of mining companies. I think I've got to agree with that.
Well, was it an easy switch from being shut off in terms of having a mine halted versus just turning it on? Was it just like, was it just an on switch wouldn't it be a difficult process to restart an entire mine?
Not necessarily. Maintenance keeps going on. Certainly production stopped or slowed over 3 to 4 weeks or something, but in the overall view of things, they may have used, a lot of companies use that time to tweak a few things and improve performance. So I think COVID has not, in general, been that big a deal on the major producers. It has had a major effect on the junior explorers and such, in that if you cannot get to a project, you really can't do any work. So if you're a U.S. company with a project down in Peru, you're kind of screwed. Likewise, Australia. If you go there from Australia, if you can get to the project, you've got a 2-week mandatory quarantine when you come back home. Now, I don't know if the quarantine affects you coming to Peru, but if you're going out into the wilds of the jungle, most companies are avoiding that altogether because the potential of bringing COVID into there, and regardless of whether they do or don't bring it into, they will be blamed. So it's a problem in that respect on the junior miners. And additionally, this is something Joe Mazumder brought up, is that due diligence required to do mergers and acquisitions and stuff has been put pretty much on hold. So a lot of companies aren't able to get out with their technical personnel to site to evaluate a property, to evaluate a management team, all that. So that has been delayed for sure.
We're going to be talking about your favorite stock pick in just a bit, but let's talk about the process of picking a company now. Last year, all the talk was on margins and margin levels. At gold price levels, we've seen this year above $1,900. We've seen $2,000 at one point. No one's really concerned about margins anymore because everyone's making great margins. Has the focus shifted?
Not for Joe and I at Exploration Insights. We are always about margin. And I think the major mining companies, you see what they're using as their price tag for gold price, $1,250 to $1,400. They're focused on margin too. Our experience and philosophy, if you will, is that we're after, and the major mining companies are after, the highest margin deposits they can come across. And I realize there's a lot of low margin to uneconomic deposits that various companies own that have done quite well, but that's not reality. And I don't think those things are going to be bought out. So no, margin is still key. We're looking at and focusing on high margin deposits.
Right. What about jurisdictional risk now? What are your favorite preferred jurisdictions versus your least preferred jurisdictions? You talked about some risks associated with COVID in Latin America, for example. What other risks are you looking for?
Well, I think in terms of exploration, that's the most significant risk we're concerned with, is that if you own a company that can't get onto the property to do the work, you're not getting any news flow, nothing's happening, and they're kind of slowly burning through their cash. So certainly if a company can't get to site, that drops them down in terms of our interest. It does, it's a checkbox that doesn't get checked. Jurisdictions, certainly Australia, Canada, Mexico, US, a few African countries where work can be performed. So it's not so much jurisdiction, it's got to do with, can a company do work right now? Can they go out and explore, drill, get people in to do work? So that's what really counts for us.
What about the risk of nationalization? I spoke to a Russian miner not too long ago, and some of the questions I got from the audience was whether or not, you know, a company or a deposit somewhere out in a place like Russia is just going to get taken over by the government without notice. Is that something you're ever looking at?
To some degree, certainly. And we've seen in Zambia, not nationalization per se, but you know, increased taxes, increased on the NSRs, that sort of thing's happening. The Congo as well. It's certainly a concern, but you know that can happen anywhere.
And do you think the price premiums are properly adjusted to reflect these risks?
Sometimes, yeah, sometimes it depends on the company and such. But certainly, the countries I mentioned, they are experiencing a higher price premium than others that I said we were not doing so well, like Zambia, Venezuela, Congo, etc.
Okay, so let's talk about things you do like now. Let's just start straight off with the company. Do you have a pick for us?
In terms of high margin deposits, Bluestone has a deposit in Cerro Blanco in Guatemala. That on the outset would appear to be a high risk jurisdiction given what's happened to Pan American on their Escobal project. But there are two completely different factors at work there. And I think Bluestone's deposit, which is a high grade underground deposit that's being backed by the Lundin Group, is going to go ahead, get permitted and get built. So that's a actual development project that we own in Exploration Insights. On the exploration side, Westhaven is a company we own. Joe's been there twice this year, visiting the project because it's an hour drive from his house, more or less. They've found one nice high-grade vein shoot, and they're finding more just by prospecting, and have had some success drilling on that. So that's another company that we own and think positive of. Another one I think would be Clean Air Technology, which is exploring and proving up a platinum palladium nickel deposit in Ontario. So those are three stocks that were, you know, I think are positive and are worth investigating and reasonably priced.
If you were to find a common theme between all these three stocks as to why you like them, what would that be?
Management. They're competent, they're honest, they know what they're doing. Joe has gotten to the point where if you can't trust and deal with management, regardless of the deposit or the prospect, he won't buy it. I think, again, we're looking at grade, which is really margin. These are potentially high margin deposits, and exploration upside. I think with anything that we get involved in, our game plan and exit strategy is to sell to a major. And I've said this before, but we'd rather sell to someone smarter than us than someone dumber than us as the exit strategy. And these projects offer the exploration upside that a major would be willing to pay a premium for, with the anticipation that as time goes on, they will add ounces or pounds or whatever as they explore.
Yeah, let's talk about M&A now. The seniors have presumably more cash lying around as a result of prices this year. What do you think they'll do with this cash?
I think we'll see dividend increases for sure. Exploration, most of them have been pretty slack on the exploration front. And I think looking across the deposits that are out there and available, there aren't that many really high quality deposits that are available in our opinion. There are some. We own one company in Australia, Bellevue, which has a very high grade deposit in West Africa. I think that's an acquisition potential. But in general, I think what we're going to see the majors do is we've seen mergers of equals where there's not much premium, just two companies coming together to make it bigger. And we'll see some mergers and acquisitions increase as companies can get their technical people on the ground to do the due diligence. That's still a little ways off. So the time being, I don't see a lot happening.
Long term, do you think seniors will be prioritizing acquisitions over greenfield exploration themselves?
It company dependent. Company dependent. I think Barrick has started to do a lot more exploration. I think it makes a lot of sense, and we're seeing this as well with majors joint venturing or partnering with juniors. We just saw that with Agnico and Maple Gold. That's the sort of thing I think we'll see, is that with a major, they can get into a joint venture or into a country or a prospect much cheaper going the joint venture route than sending their team down there and all the money, all that involved, and learning what the junior already knows and spent years learning. So I think we're going to see more joint ventures as well. And I think that's a positive. That makes a lot of sense to me.
Finally, how do you see valuations for the junior space? Overbought, oversold? How do you feel?
It's sort of a dumbbell, if you will. There's a group over here that are extremely overvalued. Something like Free Gold or what's the other one? Tudor Gold. Those are extremely overvalued, and they're being, it's sort of a retail market has moved into that. Eric Sprott talks about them every weekend, and there's like it's just over the top. Yet on the other end, you've got some good exploration companies doing good work, some that I mentioned, that have still got value, I think, in terms of risk to reward right now. So it's sort of split. There's not much in the middle.
Fantastic catching up with you, Brent. Looking forward to speaking with you again very soon. Thank you very much.
Thank you, Dave.